Alright. Fuck, it's been a while. I haven't done this in a very long time, a trade recap. The last time I did this was a couple months ago, but nevertheless, let's get started with our trade recap. So, um, let me explain. I kind of lost my funded account. I lost my account. I blew my account, which happens to the best of us, and I think that was a good thing because I wasn't really practicing enough. So I've revised my strategy, tweaked it a bit, and done a lot of practice. And yep, we're starting a fresh 50k account on Apex. And this is the trade that I took today. So today is the Thursday, the 13th of March. So yesterday was actually CPI day, which means today is PPI day. So again, being very wary of market, but um, before we looked into anything, we determined a strong daily bias. I think this is what I was missing from my previous strategy, not having a clear set like guidelines of what I should look for in my daily bias, right? So what does that entail for me, right? What strategy have I cooked up? Well, this is the secret sauce. But I'll share it with you guys because I like you guys. But basically, what it is looking for either high time frame breaks or retracements. So what do I mean by that? So you can obviously tell here 4 hour sentiment is bearish, right? Yes, we had like little breaks here, but they were very weak breaks, right? So am I going to consider that as a break to really take longs? Not really, right? So if you look at the 4 hour sentiment, it's bearish, right? It's bearish. And what happens when price goes down? We get that retrace, right? Which we did. We got that perfect retrace into here. And what does that tell me? Right. We're going bearish, but we had that little retracement, right? What does that mean? It means after we get that retrace, especially into the 50% gap of the swing high to swing low, right? Or swing, yeah, whatever, swing high to swing low. What does that mean, right? Price is most likely going to be bearish, continuing that trend. Why would you trade against the trend, right? Like, unless you're a genius, most likely or not, market will follow or price will follow where market is going. Now, on the 1 hour, it was a completely different story, right? We were just completely choppy the whole way from CPI all the way to today. But what really made this like very sticky and made me really want to take shorts for the day was all these low hanging fruits, or what I like to call low hanging fruits, right? Look at all of these juicy sell side liquidities, right? The 1 hour sell side liquidities. These were so juicy, right? So juicy. Now, if you looked at pre-market or if you looked at market open, we just completely shit the bed, right? We completely just dumped. And what did that do? It took out all of these lows here, which were my target zones, right? I must admit I was pretty sad that I didn't catch it. But not to panic, right? Not to panic because what did this do? It set up the perfect entry for shorts. What do I mean by that? Obviously, after price sweeps multiple high time frame lows, right? What is it going to do? It's obviously going to react. And I wasn't too worried about it going all the way up here. Yes, it did fill up this 5 minute fair value gap. And yes, it was over the 50% equilibrium point. But what did I like about it? It didn't fill up this 15-minute fair value gap, right? If it filled up this 15-minute fair value gap, it's a whole different story, right? I would be more cautious about taking shorts, and maybe my daily bias for today was incorrect. But this 15-minute fair value gap really supported my daily bias, and I was horny after I saw that. Well, I wasn't actually, but I mean, yeah. But what happened? Right. As soon as I saw that, I definitely wasn't waiting for the 5 minute break, right? Because we had all of the confluences, right? We had high time frame structure was pointing bearish. We already had that sweep, right? At no point was I ever considering longs today, right? Maybe you could have considered longs after price took out all of these sell side liquidity here and taken the longs all the way up here. But at no point, right, was I considering longs apart from that. little retrace. But we don't trade retraces. We trade the movements of the market. That's what you guys and what I did wrong a couple months ago, right? I wasn't focused on market structure. I always thought of market structure like put it on the side, but market structure should be the base, of your strategy, right? It should be, you know, your biggest tool to see where price wants to go. Forget about all the order blocks, forget about all the breaker blocks, all these fancy confluences. Just learn market structure, and that is the most important thing, right? So after we got that, right, after we got the retracement, after we got everything, we got the sweep, I was so confident that we would get, shorts, right? And basically very basic entry. 1 minute sweep, 1 minute break, sorry. Fill up, why can't I fucking speak? 1 minute, oh my god, alright, it's 4:20 right now. Alright, wait, I didn't mean it like that. It's 4:19 a.m., right? I'm pretty sleepy and I need to record this video. But we got the 1 minute break, and then we got the respect. Oh, why can't I fucking speak? Holy fuck, I'm stupid. Oh my god. Sorry. We got the 1 minute break, right? And we also got the invalidation of the 1 minute fair value gap, and also price tapped into an equilibrium point, right? Now, what does that tell me? This is the perfect entry for me to take short. So I enter right here, setting 1 TP down here, right? I only targeted 1 TP. Why did I only target 1 TP? Well, before we took that trade, market had already moved roughly 1.4% bearish, and we got that little retrace 0.78, so roughly 2.3 or 2.2% before we even took this trade. So what is the likelihood of price going all the way down to take out this? Well, it was very high because it did take it, but I wasn't planning to risk that, right? I just wanted to get in and out. Now that I look at it, damn, I could have made a lot more money. I just saw that, but I'm happy regardless of the trade. And yeah, that was basically the whole trade. Now, let me emphasize, learning your daily buys and learning market structure is the most important thing you can do for your skill set, right? Now, in terms of how much we made, oh shit, not that. Let me move my little guy here. So I have a 50k funded account. So I did make $724 today on a 2.56 risk to reward, which again, very, very, very happy. Only risked half 0.5%, because we are on macro NQ, so that was one contract basically. But since micro NQ, it's like a bit different. But yeah, we only risked roughly 0.5% of our account. Why did we do that? Obviously PPI, so on and so forth, blah blah blah. Market had already moved a lot. It was a pretty volatile. It already had all the volume. Was I confident in this trade? 100%, right? 1000%. But was I willing to risk more than 0.5% based on that? You can argue, like, yes, I was very confident in the trade, but also the volume before kind of put me off. But again, just following market structure. And yeah, that was the trade I took. We're gonna probably trade tomorrow because there's no news tomorrow. But yeah, hopefully we can continue this momentum so I can finally start earning money from trading once again, because I did blow my 25k account. Alright, laugh at me all you want. There's a video actually coming out on that, on how I blew my account. That's why I haven't been trading in a long time, because I've just been practicing for a long time. But yeah, hope you guys enjoyed this trade recap. I definitely haven't done one in a very, very long time, but hopefully, and I know I will, be recording more of these and sharing them with you guys. So let me know if you like these trade recaps. Let me know if you want anything different. But yeah, I'll catch you guys in the next video. See ya.